You've likely come across the shocking headlines: gold prices plummet, worst gold crash in a decade, or is gold no longer a safe haven? In 2025, something unprecedented happened. Gold, the age-old symbol of wealth, dropped dramatically. For many investors, it caused alarm. Is this a warning or is it an opportunity? In this video, we're diving deep into the biggest drop in gold prices in 2025, uncovering what caused it, what it means for investors, and most importantly, whether gold is still a safe investment for the future. If you're serious about building wealth and making smart, informed decisions, keep watching. What we reveal today might just change the way you view gold forever. What happened to gold in 2025? The decline in gold prices didn't happen overnight, but when it dropped, it fell hard, over 15% in just a few months. For a commodity known for its stability, that's a significant move. Gold had surged in previous years as inflation skyrocketed and investors fled to safe haven assets. But in early 2025, that trend reversed sharply. Central banks around the world began easing monetary policy. The fear that once drove investors toward gold was replaced with optimism in other markets. As confidence returned to equities and real estate, gold started to lose its luster. Then came the sell-offs. As investors started exiting gold to chase higher yield opportunities, the price decline became self-reinforcing. Panic set in. Gold was no longer the asset everyone was rushing to, it became the asset they were dumping. The three big reasons behind the gold crash: number one, interest rates and yield shift. As inflation cooled, central banks began cutting interest rates in early 2025. This made income-generating assets like bonds more attractive compared to non-yielding gold. The opportunity cost of holding gold increased, and investors started to reallocate funds elsewhere. Number two, strengthening of the U.S. dollar. The U.S. economy showed resilience and the dollar gained strength. Since gold is priced in dollars, a stronger dollar makes gold more expensive for foreign buyers. This reduced global demand significantly, contributing further to the decline. Number three, herd mentality and investor panic. As prices started falling, the emotional side of investing kicked in. Panic selling began. Retail investors followed the crowd. When fear takes over, logic goes out the window. Unfortunately, this fear-based reaction led to even sharper price drops. Now comes the big question: is gold still a good investment for the future? Let's zoom out for a moment. Historically, gold has been one of the most reliable stores of value. It has endured wars, recessions, pandemics, and political crises. It has gone through numerous cycles of rise and fall, yet it has always recovered over the long term. The recent dip doesn't erase its track record. Those who lost money in 2025 were likely treating gold as a short-term trade. They chased the price up during the hype and sold when the market dipped. But long-term investors see things differently. They know that volatility can offer buying opportunities, not just risks. Let's take you back to the 2008 financial crisis. During the initial panic, gold dropped sharply as investors scrambled for liquidity, but within a few years, gold reached new all-time highs. Those who stayed patient or bought during the dip were rewarded handsomely. In 2025, we could be looking at a similar situation. The fundamentals haven't changed. If anything, global uncertainty, debt levels, and monetary instability have increased. These are all long-term bullish indicators for gold. My strategy as a smart investor. At Wealth Wisdom, we don't invest emotionally. We follow fundamentals, history, and strategy. Here's what I'm doing, and what I suggest you consider if you're thinking about gold right now. Number one, studying the fundamentals. I'm not ignoring gold because of the dip. I'm digging deeper into the reasons behind the decline and evaluating its future potential. Often, when good assets fall in price, it's the best time to pay attention. Number two, dollar cost averaging timing. The bottom is impossible. That's why I buy in small amounts over time. This strategy smooths out volatility and builds a position gradually. Number three, diversification. Gold is only one part of my investment portfolio. I also hold stocks, real estate, and cash. Gold acts as a hedge, not a primary growth driver. Number 4. Staying emotionally disciplined. Fear and greed are dangerous. I stay grounded by reviewing long-term goals and not reacting to market noise. Emotional discipline is what separates successful investors from speculators. Number 5. Preparing for the future. Global economic risks aren't disappearing. In fact, long-term challenges like national debt, inflation, and geopolitical tensions are increasing. In that environment, gold's importance will likely grow. Now the question is, who should still invest in gold? Gold is not for everyone. If you're looking for fast gains or income, gold might disappoint. But if your goal is to protect your wealth, hedge against uncertainty, and reduce overall risk in your portfolio, gold still deserves a spot. It's especially valuable for conservative investors, retirees, and anyone looking to maintain purchasing power over time. The most important is it a golden opportunity or a trap? Let's be real. Investing in gold in 2025 is not risk-free. If the global economy continues stabilizing and other assets outperform, gold might underwhelm in the short term. But that's okay because the real question isn't what will gold do next week or next month. It's what role will gold play in your portfolio over the next decade. And from that perspective, buying gold during a price drop is not a mistake. It's a smart, long-term move. The biggest risk investors face today isn't the gold price crash, it's emotional decision-making. Most people panic when prices fall and buy when hype is high. That's how wealth is lost. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." The same is true for gold. So, is it still safe to invest in gold? Yes, if you understand why you're investing in it. Yes, if you're focused on long-term wealth preservation, not short-term profits. Yes, if you're strategic, disciplined, and diversified. At Wealth Wisdom, we believe in thinking long-term. We don't chase hype. We don't follow fear. We study, plan, and invest with purpose. The 2025 gold crash isn't the end of the story. It might just be the beginning of a smarter one. If you found value in this analysis, don't forget to like, comment, and subscribe. And share your thoughts. Are you investing in gold in 2025? Why or why not? Stay wise, stay patient, stay invested. This is Wealth Wisdom, and your future deserves nothing less than smart, intentional strategy.